Hello everybody, 6 months have passed by extremely fast and we are halfway through the 2023. So it's time for a review of the REITs portfolio for the first half of 2023. Quite a lot of changes happened for the REITs portfolio. This year has been extremely rough and volatile in view of the rate environment and geopolitics. So quite a lot of changes to your portfolio. I call it waves of changes. This was the portfolio as of the 1st January 2023. You can see it's quite diversified with not a lot of concentration risk. Mostly the concentration was in the industrial REITs. So AIMS APAC was at 9%, Ascendance was 13%, FLCT at 13%, and then we have a smattering of names of 5 to 8% each. So quite diversified, I thought. Of course, all these positions were gathered from mostly the crazy bit of buying in September to October 2022. So followers of this channel should have known that I went on a shopping spree towards late 2022 when the market was just crazy about selling REITs and I just snapped up everything I could using the cash I had, and I pretty much depleted all the bullets at the end of 2022. So at the peak, this portfolio formed 51% of my total portfolio, with the rest of my portfolio scattered across equities and bonds in Singapore, Hong Kong, and the US. So REITs formed 51% of my portfolio as of 1st January 2023. But as the year went by, I started to consider the various circumstances and made a lot of changes actually. First of all, the realization that the inflation is going to be higher for longer, and I watched in disbelief at the Fed raising rates to 5%. I started to sell off REITs with a high gearing ratio of anything more than 40% or around 40%. I sold the REITs away. So I've sold first of all land lease. So that was out because I was concerned about the financing for the euro denominated debt. Then I sold FCT after they bought Next and the gearing went to around 40%. Actually, if they hadn't bought Next, I would have kept it. But after they bought Next, the gearing went up, and I thought it's not the risk reward ratio was not good anymore. I sold Impact. This was not a big position, but I was banking on the Hong Kong recovery, which seems to be taking much longer than expected. So I didn't like the recovery story in Hong Kong. I was concerned about the office business parks they have in China, and the gearing was also around 40%, so I sold it. Then after that, it was idiosyncratic names actually. I sold my first REIT because I was concerned about the receivables they have. Then I tendered my shares in Sabana due to the general offer. Then I sold the Ascendance REIT as in March or April. I think the REITs went on a rally. I'm not sure why the market was optimistic about REITs when the Fed was raising rates, but I thought that the big name REITs in the SCI index yielding around 5.5%, 5.6, 5.7% was just too expensive, yielding too low compared to the risk free. So I sold Ascendance REIT. I also didn't like the fundraising that they did and the purposes. I sold also FLCT because I was thought it was quite expensive, and I was concerned about the UK business park properties. Then I sold MIT, I sold MLT. These two are good REITs, but I thought they were expensive. And with that, I sold a lot of REITs actually. And with that, the concentration of the REITs actually went massively low. So it went to 24% of portfolio. So essentially, I sold pretty much half of the REITs portfolio, right? It was a selling spree in the first half of 2023, as opposed to a buying spree in the second half of 2022. But then after that, I started to buy more names through unique circumstances. So I increased my stake in AIMS APAC through the rights issue. I talked about it in the previous video. So I didn't do much with capital, but because the portfolio went down in total value, therefore the concentration went up. So capital is now 6% of the portfolio. Although I didn't buy more though. I bought the ESR REIT in quite a big amount. The latest purchase at I think 31 cents if I remember correctly. They did a rights issue at 32.5 cents, and the markets were just very negative, right? I think short sellers were just shorting this stuff every day for whatever reason. I thought the yield is very high. I think it shouldn't be trading at such cheap levels, so I accumulated a lot of it. It's now 8% of my portfolio. I bought a lot of Starhill Global as the shares continue to dump off to hang around 50.5 to 51.5 cents. Actually, I think these levels are just way too cheap. Even at 55 cents, I would think this is cheap. So I accumulated a lot, and now this is 15% of my portfolio. A very substantial name in the portfolio now. I added a new name in Far East Hospitality Trust, so this is now 12%. I thought this is a good name, a good play on the recovering tourism in Singapore. Especially if you look at SIA stock, right? SIA is now trading at so high levels with so much optimism about the recovery of tourism. I think Far East Hospitality Trust is actually a better name to play into the tourism recovery play. Using more than 6%, low gearing, and all assets in Singapore with no FX risk, I thought it's a no-brainer. I bought more of CLCT as this stuff continue to be subjected to a lot of short sellers and trading below $1. So I bought a lot of it, and hopefully China will not let me down. I think the FX is going to be a concern with the renminbi devaluation, but at the same time, the onshore rates are going to be lowered, right? So it's going to be an outlier where the rest of the world are all raising rates like crazy, but yet China is now lowering rates. So this guy might be able to benefit from rate side, but suffer from the FX side. I didn't buy a lot more, but I did buy more of Paragon. So now this is 8%. Clean is now 8%, and I applied for the REITs actually. So I'm not sure how much I'll get. So this is gonna be changing. I also subscribe to the REITs for REIT, so this number is gonna change. This stuff has fell down in proportion. Because the share price has really fell, right, because of the rights issue. So this position is hurting my portfolio. But at least it's not too high, so that's always a good reason why I should diversify. And finally, I bought a lot of MIT. So this is now 15%. Joint highest single name in the portfolio. I hold a different view from the rest of the market. I think MIT is a good name. I think DCs is going to benefit from AI rise, and I think the redevelopment of the Singapore properties will give a big valuation, big hike to accretion to a DPU. I also look at the Japanese acquisition of the data center favorably, especially now that they have funding options in yen, and BOJ seems quite keen to keep rates at the low levels. So with all these changes to the portfolio, the REITs concentration have risen, and from 24%, it's now 38% of the portfolio. So actually I bought a lot more REITs in the meantime. I think the second half of this year is going to be extremely volatile, especially with the Fed might be raising rates 2 more times. And I think the September FOMC will generate a lot of volatility amidst a traditionally weak month for equities in general, and the Singapore STI in particular. I think August to September period has always been very down for STI. So the confluence of this factor with the possibility of raising rates in September FOMC means that there's going to be a lot of volatility in the second half of this year, and I hope to make use of that opportunity to buy back the big names like FLCT and so on and so forth. So maybe the portfolio will change a lot in the second half of this year, and we'll do a review again at the end of this year.